traders, welcome to the TMT stock market strategy video for Thursday, June 2nd. Yesterday's price action was pretty much subdued. We did made an interim low and then rallied, but really flat, very, very quiet. We're waiting for a bunch of numbers. We have some key risk events coming forward today and tomorrow. Today we just had ADP non-farm payroll numbers that came out at 8:15, pretty much in line. Signaling to the Fed, I believe, is they're going to continue to go ahead with an interest rate hike. Again, it's not going to be a big deal, but it will definitely be a shock factor, at least to the markets in the interim, and then markets will probably get back to normal. Tomorrow is going to be the non-farm payroll, as we just mentioned, and also we have OPEC meeting today. It's going to be a really big meeting, and then we have the crude oil inventory numbers. As you know, that's going to be a big factor too, because crude is following right now, has a correlation to U.S. equities. Eventually they'll disconnect, but at the moment we need to continue to pay attention to what crude oil is doing, and of course it will affect the gold markets as well. All right, so let's dive in. Just also keep one thing in mind: there's a lot of Fed governors speaking. That might also kind of gyrate the markets a little bit too. So check your calendar for today. There's a bunch of them all throughout the day. All right. We really haven't gone anywhere. We mentioned in the previous videos we have a 4-day rip to the upside. That was that holiday reversal we were looking for. We were down the previous week. They rip them higher. They're holding their gains. That is a bullish sign, but I do believe the bigger move now is to the downside. First, can we move to above 2100 and make new highs? Yes. Is that going to be the bigger move? No, because we're maybe 20, 30 handles away from that top, but I do believe that the markets, if they do make that should be a capitulatory top, put an interim top as well, and then the markets gyrate through the summer volatility, and then of course we would take it from there. But why? We could see here. I wanted to show you the Mcclellan Oscillator. I overlaid this with the S&P, and you could see right now we are at a neutral state. Here's -10, 0, right up in this area. You can see where we are here. We're at plus 27. Again, guys, plenty of room to run to the upside before we get overbought. And again, if the market does decide to turn down, plenty of room to run to the downside if the market were to sell off and become oversold. So there's a lot of room on either side. And right now, we have an extreme complacency in the marketplace, by the way. I mean, a lot of bulls. We did the investor sentiment, and we're heavily sided one way on the bulls, which is if you're a contrarian, you might want to pay attention to that, okay? But when you get one-sided like this, guys, you got to be very, very careful. Also, volatility, and we talk about this many times, volatility is extremely low, and that means that there's the complacency there. Here's the VIX, and I've been watching this, and I said every time we get a pop out of the band, below or above, right? If we get a pop above and we get a close back in the band, that creates a sell signal for the VIX, a buy signal for the markets, and vice versa. Okay, we get close to it, we get a little bit of a rally in the VIX, we'll get a sell-off in equities. All right, and this is right now, we're just right here. Okay, we were outside, we had a two-day gain, and then now we're basically sideways again. Look what's happening, though. I want you to pay attention to those Bollinger Bands. All right, this is something you guys should be monitoring every day. They're starting to contract. When they contract, watch for the expansion, and that's when the bands go out. It doesn't tell you which way the markets are going to be headed. However, my guess, if you look at, we're at about 12.5, 13 is a very big support area for the last several years. I believe if it does pop lower, it'll close back in, and that's going to create that sell signal that I'm looking for in the markets, okay? That's just one area. Let me show you the other way of measuring volatility. S&P versus the ATR, average true range. We're into this complacency period, you could see. And remember, I overlaid this in the vertical lines. Every time we get an increase in volatility, we get a sell-off, right? Same thing here. Big pop, a big sell-off, right? And same here. Big move up, and then we got our sell-off, right? And then the same thing vice versa. As we go down, we get a huge rip to the upside, all right? So we're at these complacency periods now. It's more like a cooling off period. I think we're going to have a pretty decent move. There's something big brewing here, guys. I don't know what it is, but I see gold up. I see the dollar up. I see crude oil, equities up. Everything is up, and which really should not be. It should be the opposite. And everything is up. There's a whole buying frenzy going on, and there's no supportive of the breadth of the market. The breadth of the market is horrible. I showed you the advanced decline with volume yesterday. Not going to show it to you again today. There's actually really no change. But as the markets are rallying higher, the advanced decline, the breadth, the internals of the market is not. That's a very bad sign for the bulls, okay? And again, I call it like it is. I'm neither bull or bear. I'll trade the markets the way they are. VXX, all right, here's the other, this is if you want to trade volatility. We're at these extreme lows here. And again, we're just out of that band. If you could see the yellow Bollinger Band right here, we're just right outside it. It may even close below it one more time, and then let's see if we get a market sell-off, okay? Here's the dollar ETF. And now remember, if the dollar rallies, and non-farm payroll tomorrow is going to affect pretty much every asset class, especially gold, the dollar, crude oil, and equities. I believe that this is going to be the first target here is that 200-day moving average of 24.98-ish. Okay, I think we get a pop in the dollar, which should put pressure on the commodity sector. Okay, grains, precious metals, and even crude oil for that matter. Right now, it's not mattering at all. Crude oil is being bid up and continually being bid up, and that's going to be that risk event today with the OPEC meeting is going to be a key factor. If that trends continue, the continued trend will be up, or if it's going to reverse. I think it's at its last leg in crude as well. I put out a special video out there about crude and in gold itself. Take a look at it through the YouTube video over go to our website at tradingmarkettechnicals.com. All right, let's go run real quick into this. I know this is a little bit longer than usual. Spiders daily, you can see here, we talked about that head and shoulders. No change, you see? Here's yesterday, here's the day before, here's yesterday. Inside day, really not much of a change. You can see here, though, our momentum indicators, MACD and stochastics, are kind of lagging to this last move up from last week, okay? So just want you guys to be aware of that. Here's the 60-minute, and you can see we have negative divergence on a 60-minute as this move happened last week and yesterday. We're not going anywhere. You can see the MACD didn't even cross over to the upside. So we have negative divergence on the 60-minute charts. You have to use caution. All it needs is one little catalyst for a market to sell off, and there you go. Transports, deemed our leader, right? Is it leading? Absolutely not. M-top formation, target 127.17, and all it's doing is really just flagging into the 200. It's just hitting the 200. Now, it needs to get above the 200 and really start to rip and take out this two double top area. If that does, then we have a different change in trend, okay? But until that happens, we still have a negative pattern here in the transports. All right, diamonds, you can see here just kind of hovering around, waiting for a catalyst here. Very quiet markets the last week or so, very quiet. Last is the Qs. And here the Qs, again, had a really good push to the upside with Apple and the Warren Buffett situation, taking a big stake in it. Goldman downgraded Apple. I think Apple is a big short on any rally. The innovation in Apple, the innovators are gone. There is no, how many iPads do you want? How many Apple iPhones can you have? There's really no new product. So I do believe that in the interim, a short-term play in Apple would be looked at. I think you should look at something like that, all right? All right, guys, have a great day. Watch out for the OPEC, and don't forget, non-farm payroll numbers tomorrow. If you're swing traders, I'd lighten up the book going into tomorrow morning at 8:30. Have a great day.